Hello, this is Kirk with Forex Trading Secrets. What I wanted to show you in this video is our jumpstart strategy. We'll show you a few examples of how it works, and then I'll show you actually some trades that are actually taken using the strategy. So the main thing you do is the way we trade, you want to find a larger time frame. In this case, I'm using the 1 hour as a larger time frame. If you were using the 4 hour as your larger time frame, then you'd use the 4 hour, the 1 hour, 30 minute. The time frame we're using on this example is a 1 hour, 30, and 15. Usually we like to use 3 consecutive time frames. The larger one to find the direction of a trend, and we'll show you how we do that. The middle one to confirm that trend, and then the smallest of the time frames to help us to find the best timing of the entry on the trade. So I have 3 vertical lines I've drawn here. Now let's notice why I drew them in this area. When this indicator goes below or above, then that would be a point of interest. You may want to consider taking a trade. Now the reason I didn't want to consider taking trades going in the long direction, because the overall trend was short. And so I figured, well, let me just take those trades that are going in the short direction. Now there are some other ways we could actually get in some positions here also, but I wanted it to be fresh so you just see where it crosses exactly. So let's look at this very first one. Let's go to the 30-minute. The 30-minute time frame, it went below, but it was the next time frame. So on this one, this is where the actual time frame confirmed. Up here it hadn't confirmed. So we're looking at basically 2 things. That cross of the 0 line on the indicator below, and making sure these 2 moving averages are crossed as well. In this case, neither one of them were set up, but the next time frame was. So that's where you're waiting for things to set up. And now in this 15-minute, okay, right here we had to wait that 30-minute period. Then this 15-minute said this would be where we would want to consider taking a trade. So if we take a trade someplace in here, we did have it go in our favor, about 25 pips, come back up to basically a break even, and then went down. And the exit we like to use is when these moving averages cross back above and this indicator is moving back towards the 0 line. So right in here would be a good possibility or a place to consider exiting. So from the time we took that trade down to this area, we're looking at it's at 68. So let's just say a good 60 pips right there. Now we're just using waiting until the 1 hour setup. Now some people say, well, I can't be there all the time. Well, at the top of any hour, if you're in front of your computer, look through all the currency pairs. Generally, there's going to be something crossing within an hour or two of any time that you sit down to take a trade. So that's the first one. Now let's go back and let's look at the second one. Okay, right here it crossed again on the 1 hour. Now it looks like it wasn't much of a trade right there, but we don't know what's taking place over here. Let's look at 30-minute and see what that did. Okay, the 30-minute, it was below the 0 line, which that's the way the 1 hour was going. These moving averages were well opened up, saying yes, that was the direction it was going. So now let's go to the 15-minute. Could we have taken a trade here? Initially you may say, well, it might be late. We don't know whether it's going or not, but this is what you would want to look for on this one. See where it hesitated here? Once it broke down past this little low spot right here, so someplace within a few pips there, 5 or 10 pips, you can take a trade, and the exit signal, well, it's starting to go back up, and these moving averages crossed. So someplace in here, so there was a good another 35 pips on that one. We'll quickly go to the last one. We'll move this anchor over here to hold the position. Okay, you can see that, yes, there could have been something up in here, but this is the bar that told you the momentum was going short. We confirmed that on the 30-minute. It was down below. It was opened up going down. Let's see if there's an entry signal on that 15-minute. Okay, I would say this would be a good one because once it breaks past this area, any place over in here, then you say, well, that's considered a possibly good place to make a trade. So someplace in here we say we entered a trade where the exit signal, right down in here someplace is another 50 pips. So that's the concept of how it sets up. Now you say, well, yeah, you're looking at history. Okay, let's look at something totally different and see how it looks when we're how we find it. Now all this instruction is in the Jumpstart Strategy. That is free material on our website, and you will have access to that if you'd like. We'll go to another currency pair right now. Now, what I've done here is I've gone back in time. We can't see what is taking place over here, but we were waiting for that 1 hour. And so what we're looking for is the cross below the zero line right here. It did go across. Now we're going to go to the 30-minute and see if that confirmed it. Yes, the moving averages are opened up wide, and this indicator was going way below the zero line. Let's go back. Now we're looking at closed bars, so we would have seen this up in here someplace. Now let's look at that 30-minute. So it's still up there on that bar, plenty of time. Now let's look at the 15-minute. Okay, would we want to take that? Maybe, maybe not. So I'm going to hit the F12 key. I'm going to say that I'm going to take this trade, but I'm going to wait until it passes below these two price bars here, because they come down, formed a low, went back up, and they come back down. So it'll be right in here where I'd consider taking a trade. So let's hit the F12 key, and it moved over one time frame. It went in our direction. What are we looking for as the exit? When those moving averages cross back up, or we start seeing this indicator go back towards the zero line. So I hit the F12 again. Okay, they're just starting to turn, but it doesn't say necessarily that we should get out. Right here, if you hadn't moved your stop, you'd still be in that trade. We're still in the trade. It's starting to come back up. That's only heads up. That's not a reason to get out, because the moving averages are still going short, and they're going short still. They've opened up, even taken off and gone faster. I'm going faster because he knows that moving average is starting to turn. Okay, right in here, or maybe the next bar, I would consider getting out. So right in that area is where I would consider exiting the trade, someplace right in here. And so because we took it based on it past a support level, and so there was 100 pips on that. Now we could have gone to a larger time frame and not been suffering through this area. Everything still said to stay in, but let's look what the 30-minute said. See, the 30-minute was even more widely open. It was really easier to trade the 30-minute on this time frame, but we timed the entry on the 15, and now we can go back to the 1 hour, and this is what it looks like on the 1 hour. It's starting to turn. So let's see what it looks like by going. We've gotten out of the trade, we've been in, timed it, and got out. And okay, so we got out about over here someplace where the 30-minute and the 15-minute started changing directions to let us know to get out. Now the 1 hour confirmed that, and so that's a good trade. That's how the concept works. You find a larger time frame, and you wait until it crosses the zero line up or down, and then you go to a smaller time frame and time your entry. Now this is just a strategy. This is not our complete system. There's a lot of other ways to help you to justify and know what to do and how to enter trades more than this. So what we're going to do now is we're going to go to some trades that I've taken recently. So here's a trade that I took earlier today. It looks like it's a 1 hour chart, and notice that it was down below here. The reason I took it was because the moving averages opened up. I didn't time it there. That's where I saw it. Now let's move the anchor back over here, and let's go to the 30-minute. Okay, see, I waited a while before it to hit there, and it started breaking these fractals, but let's confirm it. That's a confirmation. Now let's look at the entry. The entry was on the 15-minute over here. And then I had to take profit set. Looks like 49.50 pips. I had to take profit set, and it hit my take profit. So that didn't follow the exit part of the strategy. That took a exit based on what I perceived would be a good place for a take profit. And there's ways of managing the trade also. So that's just one example of how the system. You saw how I did the same thing in these trades as you're seeing in the example before. Now here's a trade that I saw on this 1 hour time frame. It wasn't necessarily right at the beginning, but it was early on, and it had taken a dip and it had gone back up a little way. So I thought, okay, this is opened up pretty wide. Let me take a look at it. So I then go to the 30-minute. Well, it says yes, it's in the middle of this thing here. There's nothing saying not to take it. So I went to the 15-minute, and here's where we enter the trade. Because everything else looked good, it was passing past these basically swing high levels right here in that area. So we entered the trade. And it was not managed on this time frame. If it managed on this time frame, I would have been out at 40 some odd pips right in there. You go back to the larger time frame, to the 30-minute time frame, that would have had you getting out right about the same point as the smaller time frame. I looked at this larger time frame. I saw that this was just a little corrective move right here. So I thought, well, I'm just going to stay in a little bit because everything is still going strong. And so what do we get on this trade? This one I think I closed. I don't see any take profit marks there, so I must have closed this one. This is 126 pips, 121 pips that I made on that one. It looks like right here I had my stop loss. I was trailing it on my stop loss, so I was protecting 84 pips at that particular point. And then when it turns, then I come over and just closed it. So that's how the jumpstart strategy can work. There's a lot more in our course material, but take a look at this. Come and get involved with it. Take advantage of the free jumpstart strategy. Learn how to use it. We found that many people, they tell us that this strategy helped them to be better traders. Now, not all of them came and traded with us. They were doing pretty good on their own, but they saw the strategy and thought, oh, this has a lot of merit, and they use it with their current method of trading. Most of them do come and want to get involved with us because we can help find trades for one another as we go through our trading weeks. And that's another issue that we can share with you when you learn more about us and respond to some of the emails that we have. You can join groups and trading rooms and different things to see how we trade. Anyway, thanks for being here. That's what I have for today on the jumpstart strategy and some trades taking. You saw how they played out and how I managed them. Now, the skills that I used to manage this trade were based on our full course material. It wasn't solely on the jumpstart, but you can see that I was using the entry methods and some of the exit and trailing this trade to protect the profit. I don't call those trailing stops. I call them protect profits because that's what it's doing. It's a trailing stop when it's back here, but it's a protect profit as it's going once the trade is profitable. Anyway, thanks for being with us, and you can visit us at forextradingsecrets.com. Click on the link, fill out your name, and get some information so you can get into the Jumpstart strategy for free on our login page where our course material is housed. That would be the best way to get there. So thanks for being with us, and we'll talk to you another time.